Hi everyone and welcome to today's morning report with me, Richard Perry, market analyst at Hantech Markets for Wednesday the 6th of August. The European session has started on the back foot, really quite negative. The DAX is 0.9% lower, the FTSE about 0.5% off, and this decline has come on the back of reports that the Polish foreign minister has said that the Russian troops are amassing on the border with the Ukraine, and that's certainly brought the geopolitical situation to a head once again, and brought it right back into focus for traders. So the Wall Street markets closed sharply down. They had a big fall into the close, about 1% lower on the S&P. And that followed into the Asian trading session. Again, Nikkei was around about 1% down at the close, and as I said, we're seeing European markets lower as a result. Now, the fact is that also the dollar has been tending to be a big beneficiary of these renewed war. Whenever the Russian and Ukrainian political tensions start to flare up, and the dollar has been a big beneficiary of that, and it seems to be that once again that is what we're seeing today. We're seeing the this is the VIX that spiked high yesterday. That was just reflective of the fear that which still remains in the market, certainly in the equity markets anyway, that have been come under significant pressure recently. But the dollar has broke out above that 81.3 on the dollar index, and now has used that as the basis of support and is pushing higher again. You would certainly look at that 82.6 high that we saw back in September last year as a potential next real target. But yeah, this is that dollar, and it used that breakout level as a nice basis of support. But yeah, the dollar is pretty much strong across the board. The euro, sterling, and also some of the other commodity currencies as well. But interestingly, though, the Japanese yen has held some of its strength today. And that's, I think, is just indicative of this flight to safety that we're seeing today. Gold is also higher as well. In terms of our announcements today, economic announcements, we're looking pretty much at just UK manufacturing production and the US trade balance. UK manufacturing production is forecast to come in slightly down, 2.1% on the year-on-year stats, and that would certainly suggest that this manufacturing production has just tailed off recently. So that is possibly what we're seeing now, and it's certainly with the manufacturing PMI dropping as well. That just suggests that this industry is beginning to tail off in terms of its growth, potentially. So one to certainly keep an eye on there. Furthermore, this morning at 10 o'clock, you've got the Italian GDP. Now, Italy has been a bit of a struggler, certainly in the European stakes, and so the GDP number is forecast to come in at 0.2% for the quarter for Q2, and if that disappoints, then that could certainly hit the euro today. Then into the afternoon, we've got the US trade balance forecast to slightly deteriorate by a very small amount to negative 44.7, so that would suggest a slight edging away from the dollar, with slightly more demand for foreign goods over US goods, so that would suggest a slight flight away from the dollar in terms of trading. But it's not an enormous difference to last month, so it probably wouldn't make a huge impact on the dollar trading. I think we're trading certainly more on these geopolitical events today, and it's likely to continue that way. Which leads me to my chart of the day, which is the DAX. Certainly, the German market has been significantly impacted by the Russian sanctions in the last few days. Certainly, as the sanctions have been ramped up, the DAX has been significantly sold off. And yes, and once again we've gapped lower at the open. It's now at the lowest point since March. and that key March low is the next real support you've got there at 89.13. But a slight rebound after the open, which saw the DAX fall to 90.64. But you've still got that gap that's opened, and I'll show you on the intraday chart. You've still, as I said, got this gap down that is opened, and theoretically gaps should close or be filled. So that gap comes in at 91.52, so there is potentially for a little bit of upside, maybe. But in terms of where the DAX is trading on a longer term basis, the RSI is oversold, and also interestingly, the Bollinger Bands are playing a role as well. The DAX is trading outside the Bollinger Bands, which is quite a rare occurrence there. It certainly suggests extreme trading, and if you look at that precipitous decline over the past month that we've seen on the DAX since that high that we saw just above 10,000, it's almost certainly 9% off in that time. So it's a big decline, and you would certainly say that is extreme trading, and potentially once the geopolitical events start to just calm down a bit, you might well see a technical rally on the DAX, and you may well see a rally back towards this 9,400 mark, which is a historic pivot level on the DAX. But certainly at the moment, we're still under pressure on the downside, and all these momentum indicators are very negative, so the sellers are certainly in control at the moment. Anyway, I wish you good luck in your trading on the DAX today, and I will speak to you later. Thank you.